think it took us quite some months to build up all the pipelines and to make sure system is stable, and with every block mined in Ethereum, it's parsed and stored properly. So we didn't catch these patterns back at that time. That also was September, November. We just finished, I think, like a little bit late, like December. But now, when we started looking at the data, we found out this is the same story you have with most of the assets if you take on-chain data. So it's not from the exchanges. It's really how people who hold the private keys and send tokens to exchange or between each other, mostly to exchange and from exchange, how they interact on the network. And if you pay attention, the same story, and we can check later, or you can check on our web pages, data is accessible, it's public. It repeats over and over again. There is some jump, there is some accumulation, and then price keeps growing, interest falling, network is slowing down, but price, like by inertia, it's like a rocket, it's still going up, and at some point of time it cannot go up anymore. And the same story, by the way, was for the whole crypto. Now when we get access to more interesting data, like was everywhere. Amount of web traffic to most web pages is like peaked shortly before we get to the top. Or there is interesting parameter kimchi premium, like how much Korean traders were ready to pay just to get some crypto, like get to 30%, like they paid 30% more for any asset they could get access. It also peaked very close to the top of crypto. And maybe we could run even more interesting research if we collect all the social data and see if really like picked exactly at the time. The same pattern, because humans are humans and our nature is the nature, nothing can change it, and it will be like this forever. Or maybe the data will deviate and we will get some more data which is more clean or less clean, but the behavior will stay the same, nothing will change. So this is already getting interesting, where you as a data scientist can get access to huge pile of data, and you can try to run your models or your assumptions, and we can even get access, we can get you access to the data through API or common or CS file, whatever you like, and you just start playing with it and you see, can I see or can my machine find out something interesting on existing data?
Let's, I think, describe what we see here, because I think it's not very clear. So the green, so this is Santiment.
It's our own token.
Yes.
Indeed.
And I'm Valentin, the CTO of Santiment. So this is on our website, so it's publicly available. So the green one is the price of Santiment over time. The yellow bars is a stat that we call burn rate. It's a bit hard to explain it in one sentence, but the idea is that this stat is going to jump when you have large amount of tokens that have been sitting around still for a while in a wallet, and they get moved at some point. So somebody obviously has been holding these tokens for a while, then he decided to move them, and you're gonna see a spike of this metric. And the blue lines is the amount of unique addresses that has been transacting this token on the chain every day. Here I think the resolution is daily data. So when it spikes, then you have more participants on chain that are exchanging this token. It could be a kind of a proxy about active users if you have a social network, for example.
Yeah, and all trading volume if you compare it to exchange to some degree. Yeah.
There are some really nice correlations when you start digging into that. For example, if you're familiar how exchanges work, crypto exchanges, when you want to deposit tokens on an exchange, you're given a unique address. So very frequently we see a spike in daily active users when we see a spike in exchange activity, because the explanation is that more people are depositing tokens on an exchange or withdrawing funds from an exchange, which leads to a spike in the daily active users.
Thanks for explaining. Indeed, yeah. That's a good explanation. And can you click take away daily active address, yeah, and click on transaction volume? This alone also interesting metrics. transaction volume is like really how many tokens are moved. And the burn rate is kind of adjusted to how long they have not been moved before. So you see in some specific periods of time, then sometimes it corresponds, it means that recently bought tokens have been moved, but sometimes you see small amount of tokens, huge burn rate. It means someone had a really strong reason, it means emotion, to do this action. Either he got depressed and capitulated, you see it very often close to bottom, say, okay, I can't hold it anymore. My 1 million become 100,000, enough. Or he got very excited, say, wow, finally I got to my goal, my 100,000 become 1 million. So it can happen to both sides. And you can see it very often if you browse around the data, or you can get the data and build it for yourself. It shows the human behavior quite clean. The data is still not spoiled by manipulations or like attempt of hedge funds to make use for them and make others to buy or sell. It's still very clean. But even if they start to use it to their advantage, I believe we will be able to adjust the models or the way how we clean or identify the data as it goes, because we see what's going on and we can adjust it to the price. If proper model, I think, should learn also this price action, what's happening. What is the next? Yeah, the same project, Golem network. You will see repeating pattern. And the Golem network was, I think, maybe the together with Omi's goal, with this from 10 million to 1 billion shot, was the most popular and where you have a huge network of people who participate in a big set of data, and it shows perfectly clean patterns. Again, spikes of interest, and then price keeps growing, interest of the network keeps falling. And again, on that top, even on the ultimate top, like in general, you see this pattern. Just to show that, and the network could really grow big. I think we don't have it here. In another visualization, it's like around sometimes 2,000 participants, like every day exchanging the activity. Yeah, and recently once they launched the network, Golem, I think it was maybe one and a half months ago, they finally developed product they promised. Then you can start collecting this, what I call small portion of fundamental real data, which is growing now. And you can measure how many nodes are nodes who offer the computer for service for rendering, like registered to the network, and how many payments taking place. Still small numbers, but you have additional very interesting set of data. You can correlate it to yeah, this is an interesting point, because now you have some kind of usage of the network, not only speculation. You remember this big red circle? Now you have small green one. And you can start splitting activity on a blockchain, saying, okay, this communication between addresses, it still does belong to speculation, because it goes to and from exchange. Or let's say another one, they do belong only to real network activity, because they, well, you know, you analyze smart contract, you see what functions is it using, and we do extract all the transactions specific for the functions. Okay, this is a real network activity. The rest is speculation. Now you can really overlap how much does it react to changes in the real network usage corresponding to the price. So it's a new data which we have since months. I think we will come at some point of time to know.
Yeah, so that was an exercise that we did in order to analyze the state of the Golem network using different data points. In this particular case, we combined the on-chain activity with how their network is growing and trying to figure out, for example, how much payments from each month in dollars is actually done using their network. The conclusion that we reached back then is that there is much more resources being offered on the Golem network than being requested. So if you are someone that is willing to decrease their spending for rendering 3D scenes, maybe a movie studio or something, maybe it makes sense to try it out because probably you can decrease your costs. So basically, the network is underutilized by the resources that it offers. Now, we haven't updated this research in a while. Just recently, we actually managed to spot a huge amount of payments, over $100,000 were paid off. So maybe someone also figured this out and started to utilize the network. But it needs a little bit more research to figure out what exactly happened.
Yeah, once again, we'll be very happy and enjoy if you can collaborate, work with us on this research and actually dozens of others. Our team is still not, though not the smallest one, I think like around 20 people, but the amount of work is like for 200 people. There's too much data to analyze and dig into it.
Yeah, this is the transactional interscan that is the one that we detected. And this is something that I've never seen anywhere else. Like just nobody noticed this big payment that happened. So it's interesting stuff.
Okay, but in general, you focus on predicting the price of the next day, week,
we are not,
month?
We are not predicting the price. We are providing better access to this data and maybe some framework how you can analyze it. We leave it up to you to predict it or use it for yourself, write report, maybe build your career or to become real. We have second part of the platform where you can publish your insight and you build up your reputation and people will start following you. We as a core team, even though I have the skill, but I try, and I use it only through our own insight feature. It's not the core message of the platform. So I'm just participant of the network.
So this is the on-chain data from Golem here. Yeah, so you see the burn rate here, which is the same that we saw on the website. And the on-chain transaction volume. And this is something that is kind of unique. This is the amount of funds that are going in and out of exchanges. So when this, I like this, so these two charts are basically the same data, but one is having the inflow and outflow of tokens separated, and this one is combined. When it's above zero, you have more tokens getting into exchanges. When it's below zero, you have more tokens being withdrawn from exchanges. So it kind of shows you that people either, like the hypothesis is that if you have more tokens going into exchanges, more these tokens are entering a speculation activity, so most probably somebody wants to sell them. Yeah. So that could put pressure on the price. If you have a lot of tokens being withdrawn, then potentially there could be more utility to these tokens. Maybe they can be used now for something more than speculation.
Yeah. But I think it will show like for a longer time because utility. Maybe this is the one who then uses it for payment for rendering. Who knows?
And the last one is the daily active addresses. So this is the unique addresses that been transacting this particular token. And here you see like this correlation that I told you about. So this is a huge outflow of funds for Golem. And also you see on the same day a spike in daily active addresses. And usually these two events are related because when you start withdrawing, you get withdrawals to unique addresses. And you can see the same pattern here, but inflow of tokens, again, a correlation in daily active addresses because you have all these unique addresses being used to deposit funds.
As you can see, it happens on the local, in this case, on the local tops. Like there is a very basic model, like more than 3 or 4 times above average activity, and it marks sometimes top, sometimes bottom, but a peak in the price discovery too. Oh yeah, this is actually my favorite, well, one of favorites because it's related to crowd psychology in a pure form. You know, the crypto crowd, it's amazing as long as you're not really a part of the crowd. Because then it becomes the same. And it's you need some understanding or some skill built over some, not so long, but some time. Because there are difference between projects. There are projects and there are projects. And there are different communities and the way how they communicate can differ. But what does not differ is that once again, when you see unusual spikes, it has a very strong meaning. Either it's right away top or bottom, or like in what was it? Tron. Or like in the case of Tron, you see huge community activity. And in that case, I think they were hoping for increasing the price, communicating very happily, and because they're preparing for launch of their network, there was a lot of good news, and the market was more or less stable for some time. You don't see it from here, but we have also underlying data when you, this is once again where you can build your artificial intelligence model. Whenever something happens which is out of average noise, like it's a kind of signal, you can grasp to the data and try to see does it fit one of the predefined patterns, or does it is it useful for my model to train it a little bit more. These signals are quite interesting and regular and happen like actually in every single token.
So let's also explain what we see here. So these are social activities, so amount of messages that are mentioning Tron in 3 different channels. First channel we call professional trader chats. So these are chats where traders are discussing different assets, trades, and that kind of stuff. Next one is Telegram, and all Telegram except their own community. So everyone outside of the Tron community talking about Tron. And the last one is the volume of activity in their community. So how much the Tron community is communicating. Actually it's pretty awesome to see how these 2 completely different channels are so much correlated. You know, I guess the price is just the
Bring of all these emotions.
Yeah, these emotions are spreading really fast. So yeah, you can see how the correlation is just amazing.
Are you asking about, are you checking actually what they're saying? Is it positive, yes, negative?
We will come to it in a few slides.
So yeah, I think we don't prepare this chart.
No, I mean, you mean crowd mood?
Yeah, so we have, we develop simplified sentiment analysis statistic, but right now it's not really sophisticated, so we haven't released this in our closed beta yet. We just experiment with it, and we have some more development on NLP, which I think will be much better to integrate than just using simple keyword sentiment analysis.
Yeah,
you can spend a lot of time tweaking that.
We will mention, because it's also important part how we see building community, and collaborators. We do prepare a lot of groundwork, like along this crunching of data, which now takes, as I say, every block and runs on a big cluster on Amazon, and we give access. It's a one of groundwork. In a few slides, you will see what we prepared for those who want to build AI models specifically for crypto, because we spend 3 months and quite some money outsourcing to collaborating with professionals how to build some fundamental layer where if you do AI, it will be the proper AI, not just some generic and not related to crypto AI. Is it the same or not just ONT? Yeah, you will see it's repeating over and over again. Some extremely or unusual spikes, they happen at a specific point of price discovery, and if you look into underlying data, then you should be able to identify what does it mean. Is it now they're excited, or they're waiting for something to happen, or they're finally depressed and want to give up. Oh yeah, and here's we coming to what we prepared over the last, I think, 2 or 3 months for further building of AI models.
So here what we have is we have this word embedding model that basically takes words and represents them as a vector of numbers, which is maybe some of you work about word to vec and some other NLP techniques to do this. It's really awesome because it's unsupervised model, and it allows it allows you to, when you map the words to vectors, you can start measuring the distance between them. What we see here is a bunch of words that are taken and they're drawn in 2D. So a lot of the data is actually missing here because you transfer 100 dimensions into 2 dimensions. But the idea is you take their vectors and you run a k-means clustering to see which words are close to each other. And I mentioned again, this is unsupervised model that when trained on a crypto dataset, it managed to figure out that SEC, Hype, ICO, and Santiment, and Fundrise are belonging to the same cluster. Exchange, Fiat, USD, BTC, Cash, Bitcoin, Ethereum, they also belong to a separate cluster. BitConnect, Ponzi, Pump and Dump are in the same cluster. As I said, this is unsupervised. This is the AI that managed to figure this out. And this model itself can be used as a base for building much more complicated models. And we are actually exploring some. We have several ideas, and we're going to try them out.
Question here.
Thank you. Rather not content-wise, but more on the methods of developing. Could you maybe share with us, for prototyping, for example, what kind of tools, the next blockchain startup founders could maybe use, or with technologies you actually were confronted with and you actually developed with?
So I would say that we use Kubernetes for running our operations. And this is really great because it doesn't restrict us on any particular technology. And we try to use the tools that are appropriate for the given task that we have. So, for example, with AI and NLP, we have a great ecosystem around the Python ecosystem and a lot of libraries for that. So using this makes a lot of sense. So you're probably going to use Python for such kind of analysis, or R. Now, if you do some other kind of analysis, then maybe some other language will make more sense. But we try to be language agnostic. So we try to use a platform that allows us to run any technology in there.
What was the first one? Analytics or
Kubernetes.
Kubernetes.
But this is more of a DevOps kind of thing. And I personally believe that actually the DevOps part is very important when you're building a startup, because you want to be able to very fast develop new services, deploy them really fast, scale them very easily. And this one allowed us to grow pretty fast.
Thank you.
It was actually a good question, because the reason we're working closer with Santiment is we want to support new entrepreneurs coming into this space. Santiment definitely is building an open platform, but Maxim, you'll mention this a bit later, of course.
Yeah. One of our mission, maybe like a passion, because Ram talked about passion, is to make our crypto space as fast as possible, accessible to as many people as possible. It means market should be even more efficient, more transparent. Anyone with skills and dedication should be able to analyze and see what's going on, which is right now not the case. Building up this fundamental, given access, we want to build a community around who will even scale it even faster and give even more meaning to the data, and will make it not possible to price to become like 10 times increased in the value, just because the data will be very accessible, it will be very visible. And we can prove, because we can run these models, and we can even in lifetime put signals in the blockchain, say, this is working, like in the 70% of the time. So our mission to bring more efficiency in price discovery, where you see it's going to the top, and the bottom. You can from pure speculation perspective, you should be able to identify and to bring a price to more reasonable level without so much interaction from regulation, even though it's coming anyway, without so many appealing to be, I don't know, not so manipulative, don't do scams. It's not the way. The way is just bring transparency, bring client into the dark room, like open as much possible the data, invite people, like work with this, prove, show it to the outside, and then we'll move very fast to the stage where manipulation will not be possible. This data is, a lot of data is objective and clear to everyone if it's presented in a proper way. So that's actually our one of the big passion, and we are like striving to achieve it. Yeah.
So here's, oh, there are more questions?
It seems like what you just point out is bank is just so much regulation, and this regulation prevent efficiency. And also one of the question before that is Kubernetes and all the stuff. What kind of tool needed for the startup to create the next generation innovation? Basically Kubernetes for real-time stream analytic. That's exactly what you need, and this is what bank can't do it right now. It's all this regulation is preventing it, and all this step off, all this thing is still emerging in Germany. So there's a lot of tools that are not aware. So so this is exactly the way to disrupt bank industry.
Well, I would really love, and will be maybe even feel my mission accomplished if we would manage in Germany, like really like quite conservative and not so fast moving, to present in a different way. Like you do regulations, it's fine, but there is a very efficient and for actually interesting and fun way to bring it from different angle. As a matter of fact, we did try it already once. Because I say, like, it's my nature, like trying to bring transparency and be with high morality. September, October last year, we started Project Transparency, where we motivated all other projects, say, reveal your holdings, what you collected money and tokens, where you hold it and how you spend it. Let's prove to the outside world that we don't waste on steal. Well, the results are, well, we did subscribe to top project from Ethereum, I mean, like 25, 30, but that's all. Most of other projects, they either didn't reply, or they could not reply because this is what they were trying maybe to do, I don't know. Like I say, okay, good, fail fast, we'll spend just 3 weeks. And well, we get some visibility and there were some articles. We say, okay, let's try it from maybe some other side. And we really focused on like collecting as much data as possible. And now coming, okay, can you work with us? Let's do a next attempt. And you will have fun, and maybe you will be even profitable. You will find some cool idea, and you can create your own business.
So this example, I really like this one. So this is Cryptokitties. This is because we crunched the Ethereum, so we have basically all the data. And I like to show that it's not a tradable token like on any exchange, but this is the daily active users of Cryptokitties. You can see how it grew to insane levels. I think this is around 13,000 participants at the top. And this is exactly the bottom of Ethereum price compared to Bitcoin. I think the easy explanation is that at this point the network was so congested that it was very hard to make any transactions on Ethereum, and everyone was really pissed off. So they were like, oh, this thing doesn't work, so yeah, let's dump it. Now the level is much lower. I think right now it's around 450 unique addresses transacting these kittens. But it's a nice example because it allows you to see how the hype builds around a given thing. And there are some other contracts out there that are also quite interesting. Here is another thing. This is around a new stuff that we are putting together right now. So these are stats for Ethereum, purely Ethereum transactions. So this is the amount of Ethereum that has been transacted over time. It's very interesting how since end of February it's actually quite low. So yeah, it's these reports are built on top of our latest technology that we developed that basically allows us to run arbitrary SQL on top of the data. So if you are a data analyst and you understand SQL, you can generate all these reports and run arbitrary questions against our data. These are the daily active addresses for Ethereum, unique addresses transacting Ethereum, and this is the amount of transactions over time.
And just to repeat, Valentin and team, they built over, I don't know, last maybe a few weeks, exactly this additional layer on top of data wealth collecting, so that those who are really interested and look into what's going on, yeah, you can come and you can use it right away. You don't need to run your clusters, crunch the data, no Ethereum nodes. It's not so simple and it's very costly. You don't need to dump all the data to your local. The first test, any complicated SQL query you can write right now.
Yeah, and it's not going to time out. Okay, so this is an example for EOS on-chain data. The patterns we see here, first when they launched mainnet, the transaction volume basically goes almost to zero because everyone is on mainnet. This is the first observation. Also you see, so this is the stat for the exchange fall balance. You can see a lot of EOS tokens going into exchanges here around mid of April. Our hypothesis is that people were putting their tokens on exchanges to more easily get swapped on mainnet, because otherwise you need to register the tokens and all that. So it's much easier to just put it on exchange. Now, so you look at this data for a single project, and it's interesting, but still it becomes even more interesting when you put it against everything else. So this will be really, really small for you to read, but the idea is that here are all the ERC20 tokens, and we sort them by the amount of dollars that has been going in or out of exchanges. So the top projects that are getting the most amount of USD dollars getting put on exchanges will be at the top, and we can change the time frame here. So we generate this report for the last week, and we then compare this volume for the week before that, and we see that, for example, SingularityNet has an increase of 100% of dollars getting deposited on exchanges. And actually right now we're working on this newsletter where we're going to compile this data for top 5 projects. And we're gonna compile this newsletter where we say, okay, for the last week, the top projects that are gaining most dollars into exchanges and the top projects getting the most dollars out of exchanges, here they are, here how their price changes, and you can make your investment decisions based on that. So getting each of these data feeds and comparing the projects using them, it's like one level above just looking at a single project. It becomes really interesting back then.
Right, question?
Yep.
Just a short question to this overview. So how do you distinguish which ERC20 token that dollar amount went to? I mean, you can publicly only just see that it went to the exchange, and how do you see that it's, let's say, the Singularity token was bought with those dollars?
No, so the idea is that we look at the on-chain activity and we see how much Singularity tokens has been transacted to exchange wallets, and we take the price of the tokens, of like an average price for the day, and we calculate this across the whole week. So we see, this way we estimate how much dollar amount went into the exchange. Now what happens in the exchange we don't know, because it's a black box. But you can see how much funds are flowing in and out of it, of this black box.
But this is exactly the point where it will be great, cool to collaborate. Basically you can do this analysis, and it will be great complementary data, because then you would see this how much have been moved, and this how much of these moved tokens have been bought. If you, especially after some time, you train your machine to distinguish between fake orders and real ones, buy sales, you can do it. Then it's really, this is very deep analysis you can provide for potential users of this kind of deep analysis of what's going on with every token. I'm pretty sure it can predict a lot, but additional work has to be done. And lately, at the end, we will mention how we could do together this additional work. But yeah, it's very good questions. Yeah, what happened in exchange? It's closed, but not completely. You can analyze to some degree.
So with this particular case, in this particular case, here is the Singularity token exchange balance, and you can see that on the 5th of June there was this huge spike in amount of tokens being deposited to exchanges, and this is why you get this spike in dollars being deposited, and you can also see that it's correlated with the unique addresses. So seeing something like this, it's a great entry point for doing conditional research. Now you see that something is going on, so let's figure out what is it. Like,
and actually,
why this happened.
it's interesting that you mentioned. I didn't know that you will pick up this example because you were picking up examples. I know what happened to Singularity because I know this project, and they were listed on Binance. And those who are in crypto know that listing on Binance is like easy money and profits. And but this pattern was like some time ago. It's like again, like because market relies very fast, it's changing. So they don't think that will take long time. So they want to take profit as long as it works. So they moved to say, oh, listen, business, cool, let's take profits. And you see like a huge amount of.
Yeah. So yeah, I didn't know that, but yeah, the data shows it. So I mean, if you try to do research, you're gonna find it yourself. I think that's pretty much it from what we have to show. We're for this particular stat, so for this exchange flow balance, it's not ideal. It's a unique metric, but it needs a little bit more work to become even more precise. And something that we noticed recently is that some exchanges are changing their cold wallets, which is something that we actually didn't expect. And we actually saw that from the data. We saw a huge amount of tokens being moved around. We talk about hundreds of millions of dollars being moved around, and we're like, wow, what's going on? And then we figure out that, oh, exchanges are changing their cold wallets. So, no, normal stuff.
Was it Bitfinex?
I think both Bitfinex and Binance changed some of their cold wallets.
They were investigating potential intruders, so they made it to make sure they moved it.
So so it's a data set that evolves, and you need to build models that are going to evolve with the data. And we're working on improving this to be able to see in real time that such kind of events that happen. So there is definitely a lot of work to be done here. In the last 6 months, we've been mostly concentrated on building the infrastructure so that we can start growing this thing. And we are also, all the examples you saw are for Ethereum, but we're also working on adding other blockchains. So that, yeah, we have the same stats, but for everyone else.
Thanks very much. It was very interesting to see what you're figuring out here. I'm working in the field of seasonality in the traditional stock market. So I'm wondering, you get really deep into the cryptocurrency. It would be interesting to hear something from what you have seen so far, like on a daily basis or even on a minute.
We have.
Thanks.
This is interesting. We will go a little bit to speculations that there is a full moon cycles. Yeah, I'm not joking. Yeah, because full moons affect our emotions and brain, and you're affected already by this crazy crisis. So when it fits together, we see it quite often. If you simply put a full moon cycles, you will see some kind of seasonality. But there is another one. It's like most like 6 to 12 months. Yeah? Sometimes we tend to grow 12 months and fall crazy 6 months. It's we need to go into details, but cycles are much faster than in traditional markets, and the price changes much more violent. There is this seasonality, not in a way like a weather. Moon it was just installed, and I remember, but more like a cycles. And the cycles, you can recognize them.
Val, any last minute thoughts?
Yeah, so I think, in my opinion, as a more technical person, I think a lot of the approaches in the regular stock market you can use here to model different events. And in that sense, I really believe that, so we were developing all these data feeds and infrastructure and all this, and actually right now we are getting into the area of starting to analyze this data, now when we have it, when we manage to clean it up, have it in real time, and there will be some very interesting insights, I believe, for, like we are already seeing some of them, and we're also thinking how is the best way to monetize them. But there are definitely, and I think the same approaches in the stock market can be used here for crypto, but it's just different data sets. And it's very exciting because a lot of these data sets are actually available. It takes quite a bit of effort to extract, filter them, clean them up, and have them in nice format. But once you have that, it's really interesting.
Thank you.
Yes? Yes. What?